Hello, everyone. I had to do a little dramatic pause there, a Wednesday dramatic pause before entering. Before entering, actually, I just couldn't click on the button fast enough. So sorry about that. It's been we had a plumbing leak last night. I only got 3.5 hours of sleep. So luckily, there's not much going on today in terms of announcements, in terms of reports. What do we got? We'll get to that in a second. Finally getting a look what's looking to be a short-term pullback. By the way, on other news, I recorded the Futures Edge podcast with Bob and Jim yesterday afternoon, so watch for that to drop in a few days. I always appreciate you tuning into it. All right, let's see who's here. Good morning, McRangers. McRangers, first in. Good morning, Patrick. What else do we have? We had Uber earnings this morning. I did not. I looked at Spotify. I know you have. Shopify. It's just another FI, which did do a beat. But people not happy with the earnings and down almost 20% pre-market. So we will see about that. Disney's bouncing now this morning after its sell-off. Sorry, I'm having to have extra coffee this morning. Good morning, Martinez. Oh, I didn't see. I read that this morning. It was really I can't even pronounce that, but then you fixed it. I didn't even see that it was incorrect. Good morning, John. Maybe I'll just have to squint more at the screen. Good morning, Jacob. I did see that, though, Sterling. Thank you. Down. It's going to shrug off that news, too. It's still going to roll over long term just because of the patterns and everything's going over. But, whether Tesla committed securities fraud or misled the consumers, we'll see about that. I think they did, especially with that painted black video that's still available on the website, where the driver's only there for supervision purposes or for legal reasons only. But the whole thing was pretty much staged. How long ago was that? Like 2016? Boy, that's 8 years ago. Whew. Good morning, Mark. Good morning, Eric. I did not see Intel in forecast Q2 revenue below midpoint. Interesting. I saw that Intel was down. I did not see what Sterling put in here. Thank you. So thank you. There, drops 2.5. I did notice it was down, which we'll get to in a second. All the chips are down. NVIDIA might trigger a little mini double top. There's your Tesla down 3.5%. Well, look, it's pretty red this morning. But you know what? We're up against key resistance on that channel, so not surprised to see a pullback. Hello, Pavneet. Good morning, Richard. Go Dallas Stars. I have not. Normally Normally I follow hockey a little more closely. I just haven't this spring, and I've not looked at all at it. But you got the Dallas Stars. Let's see. U.S. popularity shrinks. The only thing not shrinking is the deficit in this country. Hello, Charles. Good morning, Anissa. Thank you for tuning back in. Hello, Kalani. Very early in Hawaii. Good morning, Heinrich. Good morning, Legion Reaver. Legion Reaver working on developing his methodology, making it his own with his trading plan. I'll probably give you some more feedback too. So I got a little tied up yesterday, Legion Reaver, but I really like to see people making things their own, figuring out what works for them. Just this is across the board. Try not to overcomplicate things. You don't, and I'm not talking about Legion Reaver. I'm just talking because I was looking at his stuff yesterday. This is something I had to learn and took a while for me to learn. So a lot of people probably go through it anyways. You're going to simplify stuff, especially as you get better and better. You're going to simplify stuff. You're not going to have 18 things going on, and I'm not referring to anybody in particular. You're not you're going to trim down and really just learn to read the markets. But in the beginning, you'll probably be trying to be perfect. I need 18 things. I need them all, this, that, and the other thing. But it can paralyze, and sometimes simple in trading is better. A lot of times, simple is better. You're never going to get to 100%. And actually, when I simplified, my percentages went up about 10 to 12% on win rate. And the profitability also went up. So I've been there, done that. That's why I'm pointing it out. And I understand, this is why I went way down in indicators. The price action and harmonics, whether you use fibs or harmonics, they just tell you a lot there. And then you can fine tune it using maybe a couple other things in conjunction with it. Just don't go overboard, anybody. I really appreciate those, seeing people putting so much time and effort into defining their strategies, building out their trading plans. Again, it's not something you're going to do overnight. This is not an overnight, look, learn this one simple strategy and you will tenfold your money in 6 months by learning this one simple market trick that only the market makers and professionals know. You will learn, and then you'll become a trading master. How was the move? Hey, Christoph, welcome back. The move, it was stressful going cross country, but overall, I am so happy. I'm out in the desert, so happy. We've had a few hiccups like water leak. Lost power, main breaker died. But other than that, stuff you just have to work through, especially with the rental. But, getting more and more unpacked. I'm lagging in the unpacking department. My office is an absolute disaster. But at least I can do the live stream. So thank you for asking. Good morning, Royal Palms. Did everyone catch the 1 hour head and shoulders in the index futures this morning? Did you catch it, Sterling? I noticed it. Hey, Christoph. All right, let's get to it. We'll look at some charts. I'm so happy everybody's tuning in. Thank you. Thank you for being here. All right, what do we have? We had the mortgage information out earlier. Nothing shocking there. Wholesale inventories coming out at 10 a.m. Eastern. They're not really going to be market moving unless something... I'm not expecting it. It's supposed to go into contraction. Prior was a slight expansion. It was supposed to contract, but we'll see how that comes in. Crude still pulling back into a very, very key support zone. And now we got EIA coming out. So that's going to be fascinating. I'm watching. That's besides a pullback in the financial futures after a multi-day run up. And that's just a short-term pullback because we already closed above that 62.5. I'm going to be focused mainly on crude from my own perspective with those EIA numbers coming out. Jefferson's speaking, Collins is speaking, and Cook is speaking. And we got a couple auctions, bill and note auctions sprinkled in there. Be interesting to watch the 10-year note auction also. Remember, tomorrow is Unemployment Thursday, but again, very quiet. And Friday is a preliminary consumer sentiment number and Fed speak. But again, this has been a very quiet week. Now, next week, to get it, I know we're a week off, but next week's not going to be so quiet. We got the PPI, we got the CPI with core inflation. So next week's going to get to some fun times. Tesla still pulling back after the Reuters report. Intel dropping, but all the chips looking like they're pulling back. Mega caps pretty much red. At Apple, what was it? Yesterday announcing the new iPads. It looks like the market just wants to take a breather. Disney pulling back again. It was up a little more. Groups, let's just do a quick refresh. Not much positive, only consumer defensive and healthcare. Cyclical technology, basic materials and comm services pulling back, By the way, keep an eye. Copper could be forming a little mini double top on the daily basis for the copper traders. That could copper's gone on a massive run, but now could be at least setting up for a pullback. Keep an eye on that if you're a copper trader. Fed Watch tool still cut in September, and 2 cuts priced in. It's technically 1.7, but it's 2 according to Fed Watch. Fear and greed still in fear mode, so we haven't even been able to bounce back to neutral mode yet. We had. I didn't actually not look at Rivian. I was meeting with a J.P. Morgan private client yesterday afternoon. They're a private client bank here, and I did not look at Rivian. If somebody could put that in. We had Shopify, which was a beat but down this morning. After we got Robinhood, we got Airbnb, we got AMC, we got Fake Meat Company, but nothing really that's going to move the market. And tomorrow morning we got Roblox and Warner Brothers Discovery. So even quiet on earnings. Okay. By the way, I'm on NVIDIA right now. You can see right here the little mini double is gapping down, but this does qualify against the channel in NVIDIA, and that could be a pullback to the 860 area. So if you're in NVIDIA, you see here that could pull back in the short term also. S&P yesterday, closed right around the midpoint of yesterday's bar, making a significant level right about that level and then dropping this morning. You had what Sterling was talking about with the head shoulder with the upward sloping neckline right here. If I can draw it correctly. There we go. And if you're looking at the targets on that, that would roughly be with the sloping where it broke. It went pretty much exactly to target. So that does not mean this move has to be over, but that is interesting going into the cash open. Key levels I am watching on a continued pullback, because also remember, let me just take off this neckline. Also remember we had a pretty substantial 4-day run higher. Yesterday's with this way it closed, yesterday's low was pretty key, which we broke below. Even a pullback back to 5150 area does not do any technical damage. Does not really do any technical damage. It just takes it to a prior swing high area. Doesn't even take it back to the bottom of the channel. The thing that would do technical damage is a close back below 5062. Before that, if it really started accelerating below 5120, I'd be starting to get into worry territory that is more substantially rolling over before hitting that 75% magnet. But that magnet price, that first magnet price of 52.41 is still in play. So I wanted to give the other levels I'm looking at today. On a continued pullback, the first major level I'm watching is 51.82. And then right around, I have an area 51.50 to 51.60 is if we do continue a bigger pullback, that is either a target for shorts or a place I would be looking for a more substantial bottoming area. If it gets negative pressure, that we need some pretty substantial negative tick with a very little info coming out today. Other than that, nothing's changed. We'll be watching over the next couple days for a pullback with cycles at the top. Update password to stay secure. Thank you, TradingView. We will be looking at, we have weekly cycles still headed up. Daily cycles rolling over. So these dailies could roll over for a little bit and then get to the bottom, and we could have up cycles again for another push higher another push higher going in next week, going into my birthday week. Will the market celebrate? Let's just pull that off. It's a little sloppy right there. Notice, let's see. Oops, I got to re-anchor. All right. All right. The significant pullback area is 17,900. The minor pullback area is 18,000, and we're trading against the other minor pullback area, 18,080 right now. 18,080. Again, you had the head and shoulders. I don't need to redraw it, but this pretty much, well, we'll do it. We will do it. Why not? Just to get the levels. Because remember, on any bounce, that's technically the area that broke right there. So that's played out too, right against things lining up again. This 18,075, 18,080 area, which was already on the chart before here, that's already where we've come down to. So if we break through there, I'm going 18K is my next key level. Then that's 17,900. 17,900, 17,910. To the upside, on any rally, I'd actually look at the flat. You can go back to the S&P 2 or the mini futures and do the same thing. I would not use, you could technically kiss the upward sloping neckline away. I would do the 18,165 level on any rally, on any bounce. The Dow, that's just a mess. The Dow has not been great right now. I'm still watching 38,750 as the key support. Next key target is 39,272. The Russell, by the way, I do have double tops in here, but this is not officially a double top, and because it has not hit that 75% level, I wanted to see where that would take it. Russell, after breaking yesterday's low, when you see a bar like this after a multi-day run, the lows get really important, which we did break down. Next key, very key level in the Russell on the pullback is 2045. The VIX, slight green today, but still resistance around 1375 to 14. 1375 to 14 is the key resistance area. I doubt we'll even get, going into, I'm going to more watch about 1350 going into the open, and then 14. Lining up a little better right now. The DAX hitting that 87.5. So securing potential double top territory. It can keep marching higher. However, let's take a look at this. Even if it trades up to 19,147, it's still a potential double. Not saying this ever has to trigger, but if it does trigger below the 22nd or Friday the 19th lows, we could see the pullback to the 200. Just keep that in mind. So from a longer-term trailing perspective, that would be a very interesting area on the DAX. All right, why did that? There we go. Orange. I just want to see the weekly. And that would also be below the weekly rotation zone. So you could easily see the bigger pullback. May never trigger. May get invalidated before that. But from the runs that started, boy, I gotta get more coffee in me. The run that started in November, end of October, that would be very key from a trailing point of view, because I personally would not want to give back roughly 50% of the run-up. If we look here, let's see, what would that be? If Look, that could easily give back even more than 50% of that run up. So, and ask me sometime when, not today, but I'll go over another front run thing I use. I'm probably sure people have already figured it out, but something that I really watch for. Well, I'll do it right now. So, and I'll just use the DAX as an example. So based off this harmonic, and I'm using the conservative targets from the right-hand side for the double targets, by the way. You see here where the 62.5 is. So we close below that. Let's say we were to pull back and close below it. Not only would then it close below the daily rotation zone and the daily 50, it would close below that, which would be a retest into that long tail area because the probabilities would shift to that 87.5. So I can utilize that as a potential front run and fine tune it with some intraday price action, but front run pattern to, and then, you know what, you just lower to, from my perspective, you lower to stop as it gets down to this area in case it holds support, because it may never trigger this. But if it follows through and triggers the double, you have a nice potential front run area to utilize. Now, the second area I would be watching for, you know, is if it starts breaking down, and this will be a lot more aggressive, but if you start getting momentum closes back below 18,380 with some follow through downside, I'd definitely sit up and take notice, because that was a key, very key breakout point. All right, the notes went on a these are the 10-year note futures, went on a multi-day run. I'm paying attention very closely to 108.21, this level. Let me bring it down. This level I'm paying very close attention to. So we had a key close at that level, an emotional candle rejecting that level, a spike up to that level, which then we closed above it, rejected a couple times here, setting up a lopsided double. But the level, see how this is right here? It's just above, come on, just above that level. But I'm really watching this 108.21. We could trigger the double. I'd want it to close below 108.21, and then we could start another pullback, especially at PPI and CPI next week. Might never trigger, though. Might never trigger. 10-year holding the bottom of the channel. This is just really a mess, so I'm not using any double pattern in there. The key level I'm watching is 4.5. 4.5. So the 10-year holding the bottom of the channel, holding the 50 again. The only thing that shifts me into, again, a bigger pullback in yield is now if we close below the channel in the 50. Yesterday's low was pretty key. That's where I will watch a very key low. And yesterday's lows got some significance. We had a very key close. So that's about 4.41 in the yield. Dollar index bouncing. Again, the final target, has it been invalidated? Let's see. Not yet. Still going to be watching for some rollover in this, but the dollar's getting a little stronger again after the double top. They hit the first and second targets only. So again, finding the support, not even closing below this key support zone. Crude, as I alluded earlier, finally we're dipped into that 50% area. Remember, anything below between 77.70 and 75.20 is where I'm watching for a setup, and I'll be paying very close attention today. We've got waning momentum, sort of stair step down, waning momentum going into those EIA numbers. So the key level I am looking at this point is right around 78.75. What else do we have? Gold not doing much. Gold not doing much. Still watching for a continued pullback in gold. At least to retest this low area from about 22.85. Copper, double top. I should say a potential double top, but if it does close back below 446, then we could see the pullback in copper into the weekly rotation zone. That doesn't do technical damage. Remember, copper's been overbought for a very long time with cycles at a top. So that would give some needed relief to copper. Let's see what else. What else have I missed here? There we go. Rivian misbeat EPS. So it beat on EPS. Revenue. Oh, so misbeat. So it was a miss on EPS, a beat on revenue. Okay, thank you. What was this, Patrick? What were you referring to? NASDAQ is oversold. Well, thank you, Dark Screens. It's not really oversold yet. It's NASDAQ's oversold? Oh, on what time frame? I mean, it's not oversold on a daily time frame. It could be oversold on like a 15-minute and 1 hour time frame. But it's not oversold. I mean, it's oversold on the 1 hour. But you could get a little bounce, and then remember, the bounce into the rotation zone. It's got to do some lifting, and on a daily basis, we've had what? We ran up. I mean, the NASDAQ ran up pretty substantially from last Thursday. Look at that run up. This is just a pause. What do you think of trading cocoa? You're going to have to wait. That's actually funny. I'm going to leave that for the Futures Edge podcast because Bob brought up cocoa and I talked about cocoa. And we're not talking the cocoa that occasionally tunes into this channel. We're talking the commodity. And I do talk about it, so you're going to have to wait, Richard. You guys escaped. Is that Chirac, Chicago, Chirac? They were actually looking to refill. They have an online bid, I think, in the market right around 79 for crude. Interesting. But I think that's right around where it was. They're looking to do a, oh, look, we're trying to refill it. When crude bounces back up, I'm still long-term bullish on crude. Euro, not much there right now. Let's just get to the spiders. The spiders, we got the gap down the open. Any target to the upside would be just a fill to yesterday's close. Other than that, we have another gap, but that would take it all the way back to the daily rotation zone, which will probably not happen today, but could happen over the next couple days. That gap is a magnet price of 511.29, and that would be even in front of the return. Now, the breakout level in the channel. The price action on the spiders has qualified. Right now, you see I've shifted to the conservative prices. And that, if it did trigger, which we're, again, unless something goes into crash mode, we're not triggering anytime soon, that would need a close below this 493.86. That could be a pullback all the way to the 200, which, remember, we broke above in early November and haven't looked back. So keeping a close eye in the longer term on that. Again, also the Qs have qualified it. I'm just shifting this to the conservative side right now. We have the gap down. So any magnet price, the upside is 438.10. Hold on, wrong. 440.32. The key to the downside, first is yesterday's low to open range, 436.52 to 437.30. You break that, though, the magnet price is to a gap fill of 435.48, so roughly 435.50. The targets, if the cubes were to trigger The target would even take it below the 50-week. And that would do some, and right between the 50 and the 62.5 in the major support zone. So this, from a longer term trailing perspective, is very key. From the last October's lows, when we got the weekly percent B buy off those lows, that would be, if you're trying to do a long-term trail, that would be very key. And if you're, again, you can apply that same thing I talked about, front run, if you're looking. Okay, so a warning sign before that would be 423.91 on a closing basis. And really key before that is 432.75 if you were trying to be really aggressive to the downside. That's how I personally would be looking at it. Will the NASDAQ bounce after the open? Well, we haven't gotten much of a bounce. You had a little mini double on a 5-minute basis. So if you're looking at that, I assume that met the rules. No, did it not meet the rules? Yeah, let's see. Oh, I cannot assume. 18,078.50, 18,078.75. So yes, it did meet the rules. So here you go. With the conservative top targets, because we are in the beginning stages of a sell-off, you know, this could get back to 18,115. You know, if you wanted to go aggressive, you're looking at about 18,122. But that's just again a little bounce play, not a strong move back up, because it's also against that very key support area. Let's just peek at the tick. Peeking at the tick. See, pretty negative, minus 1,000 tick opening. So we're getting that bounce with the tick recovery. What I'll be watching for to either go into more choppier mode or a little more sustained bounce is on the next tick rollover. If we start not really being able to pressure below 800, and then we start stair-stepping higher. And by stair-stepping, you can look at yesterday's afternoon. You see how this is a stair-step pattern to me. So if we start doing that throughout the morning, I'll be watching for a more solid base to be building in the futures. Isn't that a very personal question? How's our GI microbiome? It's doing fine, Richard. What do you think the initial market reaction will be when the European countries begin to cut rates? And do you think that the initial move will sustain? I actually think it'll put downward pressure on the European financial indices. So that's where we go. I'm thinking retest the low of 02 before we break down further. Of 02. What am I? Of 02. Breakdown of 02. When you're saying 02, what am I missing? Sorry, you'll have to clarify. You mentioned runs. Yeah, well, you got to build back your microbiome. Although I have been eating a lot of Mexican with hot sauce. So, Mexican with hot sauce can cause some issues. Although I grilled up burgers, I built my grill this weekend, and I seasoned it yesterday afternoon and grilled up burgers last night. So there we go. I made burgers and I topped it with pepper jack cheese and fresh guacamole. Very good. Sort of a Mexican pepper jack burger. Yesterday's okay. Yes, yesterday's low. And we can easily retest that. We can easily retest yesterday's low with this pullback. Or breaking. We broke yesterday's low. We can easily retest Monday the 6th's low. Sorry. All right. All right, well, that's enough about my bathroom habits. Again, still watching, even after a pullback, another push higher. So, based off the probabilities, nothing's changed there. Tacos or burritos? I've done some of both. I had some really good fish tacos the other night. I had a fantastic chicken burrito. Also, I went to one of my favorite local little place I used to go to all the time when I lived here before. It's called Ajoel's. You can look it up. And I go to one on 94th Street, just off of Via Linda. And they have a Mexican pizza, the Pizza Norteña, which is like a really thin. It's on a really thin cracker, like it would almost be like a taco shell that you'd use for a taco salad, but laid flat, and then it's got tons of chicken on it with a spiced jalapeno cream cheese topped with some other cheese done as a pizza. It's cut like a pizza and everything. You get it in a pizza box. Had one of those oh man, I used to order that years ago when I lived here, and it's still fantastic. Not the healthiest thing, although it's got tons of chicken on it, but fantastic. It's the little Mexican hole in the wall, and they also allow dogs when you sit outside on their little patio. You can have your well-behaved dog on the patio there. So lots of people go there and bring their dogs, which is always lovely to see. Generally, I pick up from there and bring it home, and then eat at home with the wife and the dogs. So, I need the recipe of your famous cocktail, the Planter's Punch. Hey, Chris, bring. Let's just peek into the markets. Yeah, I'll have to put the Planter's Punch recipe. Maybe I'll remind me in a bit. I'm not going to do it today. I got too much going on, but I'll have to put that in the Discord server because it's getting into Planter's Punch weather soon for me. I've been doing a lot of margaritas though. Had to get back on the margarita kick for the last little bit. Then I'm gonna not drink for a while. Then I'm gonna go into some rum drinks for these. So when it's getting 110, 115, break out some really good rum drinks, including the Planter's Punch with the fresh squeezed limes juice, the fresh squeezed orange juice. If I can get cold pressed pineapple juice, that gives the juice, and then the 3 different kinds of rum. With the bitters, oh man, you're talking. You get the fresh squeezed juice with those 3 different rums in there, and have a couple of those, and you can't stand up anymore. So you got to reserve those for the weekend. Okay, so let's take a look back at NASDAQ. We had the little mini double play out, so we did get that bounce, but this is why. Don't just guess, wait for a pattern. Look, we had as Sterling pointed out, at least he talked about the Head and Shoulders. We came down both the S&P and the NASDAQ. That target in the NASDAQ, we also had my significant level. We formed a little mini double, and then the little mini double triggered and ran. Now, does that mean it's got to recover the rest of the day? No, I'd be watching for the pullback, at least a little pullback, and then possibly build a higher base. But this means this pre-market and then right after the cash open is a very critical level on any pullback. And on the tick, let's just peek at the tick. I talked about, all right, we're approaching the 0. which yesterday afternoon, you see all the rejections between 0 and 200. That's where I'd be really focused on to see how any rollover in the tick. I'd be watching to see how the futures react now at this key support base, because actually the S&P was not. You see how it only pulled back to 62.5 between the 50 and 62.5 and then moved up. So you can't use the double targets on that. But this, for me, I'd be paying attention to this little channel. The little flagging corrective channel to watch, especially start breaking down. Now, if we start breaking down back below the 51.92 area for the rollover and to build a base down here. And if the base breaks, I then have to go to short side. If this keeps ticking up, I just keep dragging that up and watching that 62.5 level. So like we just ticked higher right there. You can extend this channel just a bit. That's exactly what I'd be watching for on a tick rollover and a pullback. If it holds this channel and holds this, because look at the 50%, right where that is. So if we get the tick rollover, holds the 50%, and then you get another tick bounce, I'd be watching for the channel to complete. If you start breaking down below that area and the tick sort of keeps going negative substantially, then I'd watch for the retest of the lows and possibly into a choppier to bearish day. Rich is hungry. Well, I hope you're still tuned in. All right, everyone. Thank you for being here. I hope this little extra lesson that we've been spending some time can help. So I wait for a setup. I used to try to front run or find reasons to get in positions years ago. Now I'll just wait for a setup. I mean, you had a couple of them this morning, like that Head and Shoulders, and then we just had the mini real time double that played out. So you wait for the setups. You don't need to, and if there is no setup, you sit on your hands. So always be another trade. Trade should just jump out at you. You shouldn't have to go, what do I do? I need to do something. What do I do? What do I do? They should, okay, here's a pattern. Triggered. Pullback. It does not invalidate it. Let's go with the little short-term pattern as the tick runs back to 0. Then you manage your position. And if you're looking for extended targets, here's what I would be looking at. So we have the post-European Open, little pullback area, and I'd be watching this again where we just stalling out this 18,145 area. But if it can then sustain back above 18,162, we could see a recovery to that European opening range. There we go. All right. And the same thing on the S&P. The key levels I'd be looking at would be about 5203.50. Then the more sustained level would be 5207. With that, I shall talk to everyone later. Hope everyone has a wonderful, wonderful trading day. And bye for now.